Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Friday the 9th of May. My final chart I'm going to look at today is gold. And to be honest, gold has actually had a bit of a consolidation day yesterday, and the doji candle, which is where basically it opens and closes at the same point, pretty much bang on there yesterday, suggests or denotes uncertainty, and you would argue that that is a pretty good reflection of the market in terms of how it's looking at Ukraine at the moment. No one really knows how to play it out, and it is a fairly decent suggestion that the market has no idea really what is going on. There is certainly, in terms of the bullish arguments, the bullish arguments on gold are counteracting the bearish arguments. You've got this 144-day moving average, which is still the basis of support, you would certainly argue, but that is counterbalanced by the fact that these momentum indicators are fairly sort of on the bearish side of neutral. The RSI failing to really get even towards 60 on the big runs, and dipping below 40 on the correction. So you've got a slight bearish configuration on the RSI. Also, the MACD lines are below neutral as well. So counterbalancing arguments there. Intraday as well. You'd look at this. Throughout this day yesterday, you sort of opened and closed at the same level. So you're trading between 1285 on the downside pretty much and 1295 on the upside. And that is where we find ourselves at the moment. Market's barely moved in the past 24 to 36 hours, so that would suggest that there's an uncertainty going on as to how to play Ukraine, because gold is definitely moving on this Ukrainian story at the moment, and it is something that you need to keep an eye on if you are trading gold, is how the market, how the events in Ukraine are unfolding. So just keep that in mind. Technically speaking, you'd argue that you're under all these moving averages, and the indicators on the hourly chart, this is are in negative configuration and just unwinding an oversold position. So you'd say that the downside pressure is there, and I think that is going to be the case unless there's going to be an escalation once more of events in Ukraine, at which time you'd see the traditional, what has been in the last few days or weeks, a traditional $30 rally in gold. The last few times things in Ukraine have kicked off, there's been a $30 rally in gold, or a $30 correction when things have calmed down. So just have that as I said yesterday, have that as a target area in mind. Okay, well, I wish you good luck in your trading on gold today. And I will speak to you on Monday. Thank you very much.